Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to continue our coverage of that beautiful green on the screen, which we have all the crypto bubbles, of course, just popping off with a profit. And we do see some interesting projects just gaining relative to the Lunas, which is a good thing. To see because, of course, money shouldn't just be directed in one FOMO direction. In crypto, we should be trying to pump up those good projects and supporting those great devs and all these things. But guys, of course, we are having positive days here. We are seeing green across the stock market. Apple up 4%. Of course, they released their new phone, which barely had any difference whatsoever as usual. I think they've been selling the same phone for like 10 years with just slightly different lens updates to the camera. Not really sure what's going on with Apple innovation. But maybe I'll look into it someday because Apple is incredibly important, and I think this is going to continue to be a winner. But it is just funny how they just like sell the same phone every single year, and it's like almost no difference whatsoever. Just so funny how they get away with that. Google down 0.05%. And of course, you do see a little bit of flatness on the screen. I think there may be some profit taking before the CPI report tomorrow. I've been just peeking at some other, commentators, other analysts who don't really follow macro, but they comment on the macro. They don't really understand what's going on in the economy, but they like heavily comment on the economy. And they are all mentioning just stay out right now. It's going to be so volatile. You should just stay out and just protect yourself. And so a lot of people might be feeling that way. But I'm not 100% sure that's justified. I think that the technicals right now are in the favor of the long side. I've been saying that for a while, ever since we bounced from my support zone on the stock market, right? Ever since we had that 50% plus, breadth on the stock market, I've been saying that's been a signal that has never failed. We had the hash ribbons, we have all these different signals suggesting that we were, at the very least, at a local bottoming process in crypto and in the stock market. And they're just like stacking up one after another. And, you know how there's disbelief on the way down? There's disbelief on the way up. And even if this just ends up being a big consolidation zone in stocks or in crypto, or both, most likely, because of how correlated they are, you shouldn't be stuck in disbelief. You should take advantage of what the chart actually presents you and what the data actually presents you. And of course, we do have the Fed's, 3-year inflation expectations today. That did come in positive for consumers. The big one is tomorrow, the CPI data. But the New York Fed's expectation give us a little bit of a hint at what to expect. So I just did pull that up for you. And lo and behold, New York Fed says that the U.S. consumers' inflation, it falls again. Okay, so this was published 4 hours ago. And so there's a little bit of a hint of what's to come tomorrow in the CPI report. Of course, those numbers are slightly different. They measure slightly different things. So, we could be dealt a wild card. But in general, I would expect the CPI numbers to be good. I think that's being baked into the price already. And so as we look at the charts, you know what? Let's just start with stocks today because it is such an important a phenomenon going on here. We do see, of course, that stocks just are continuing to pump this Monday. And we just see this beautiful, pardon me, I'm on log there. Let me put that on linear. We do see this beautiful, beautiful pump, breaking this very local downtrend, right? Here's that local bottoming process that I was telling you about, where my green box has been sitting, ever since the beginning. Right, the beginning of September, it's been right there. We basically got a kind of a double bottom. If you went to a smaller time frame, you could see the detail in here. We got basically a double bottom, had a huge engulfing candle, broke out of the support area, and that's when I told you guys that this thing was breaking to the upside. Expect to at least get to this downtrend, and then we're just going to have to wait for Monday today to see if we can break that. And we have just busted through it. Now we have to see, are we going to be able to break through our macro downtrend? Because what you're seeing on the charts here is something quite extraordinary, guys. It's very important to pay attention to the winds of change that might be happening. If we do bust out, then what we could be seeing is something like this, right, where we have this type of a breakout. And what is this? What is this pattern here? Of course, this is this is just a descending channel, but it's also very similar to a descending broadening wedge, right? And so these type of things, and it's also similar to an inverted head and shoulders. And so if we do end up breaking out of this zone, there are a lot of traders, there is a lot of money that will be convinced that we are going to be breaking to the upside. There is a lot of support being built into this area. If you look at our momentum zone, we're on the Nasdaq on the 1 day. You can see that we are well above the daily momentum zone. We are not in danger of losing our daily momentum zone. We can pull back very significantly. Let me throw on the good old EMAs. We can pull back. Yeah, I mean, we can pull back, to basically 12,600, let's say, and there'd be no issue whatsoever. We could pull back to 12,400, and we're still not in danger of breaking our momentum to the upside. And so there's an extra bit of buffer. Meanwhile, our EMAs are just pointed, almost parabolically vertical. And so this is an incredible posture to be feeling. Of course, we are hitting that daily 100, that daily 89 type territory right at that downtrend. And so this would be a good place for profit taking. That's why you do see a little bit of gray on the board, most likely. But guys, are you seeing what I'm seeing? We are actually in this weekly 9, weekly 21 zone. And so if we did break out of here, or just consolidated under here and then broke out and just consolidated in this area, we would end up putting in a weekly squeeze on the stock market. So let me show you what that looks like right here, and what you can see is that's a big ol' scoop. Now, what happened over here back in March is that we failed to hold that area. And you can see what a difference a couple months make, because we are building up some additional support, which is lifting, right? It's lifting up, right? As it supports, it's lifting and supporting as we are trying to squeeze to the upside. Now, you do see that our 50 EMA and our 89 EMA are quite horizontal, even a little bit negative. And so we are going to have a little bit of resistance, which goes along with that downtrend that we've been in. But our 200 EMA is just supporting us on the weekly. And these weeklies are looking very, very good. There's that squeeze play that I'm talking about. We have a solid candle. If we close here on the week 4 days from now, we are going to be in a great position. Now, the problem is that is 4 days from now for this closure to be confirmed. So do not take this for granted. We are probably going to see a little bit of a little bit of movement on the price. This 21 is a bit horizontal. It's not, it's not very clearly pointed up, right? So this one is just, thinking about it. The 21 is thinking about it, but we do have that possibility for a weekly squeeze play on stocks on Nasdaq. And if we jump over to, the S&P 500 mini futures, you can see that this squeeze is actually already pushing through on the weekly. And so that is a confirmed squeeze on the S&P 500, which is interesting because if we go ahead and throw on the S&P lines, you can see that the S&P isn't even close to its downtrend, area, which the Nasdaq is butting its head against its downtrend. Right? Let's just flip back over to the Nasdaq. You can see it's butting its head on its downtrend, which does suggest that perhaps the downtrend line is really this point, not this point, and that we may have to readjust this just to sync up the charts, right? There was a significant difference in how these two charts played with their downtrend in this last pump over here. Nasdaq just breaking through and then, just dropping down to hell after having done so. But maybe the Nasdaq was just so weak during the first part of the downturn that we've been having that the S&P actually set the correct tone. So if the S&P had a higher number earlier on, then its downtrend will have a little bit more headroom. And I think, guys, that we may need to adjust to what the S&P is doing with this midsection right here on the Nasdaq in order to get a clearer picture of what's going on. And let me just remind you of what that picture is, just going to drop down to the daily. And what you can see, I gave you the master keys to this market, right? Guys, I was saying if we are going to bounce from this green zone, right? And if we were going to bounce from this green zone, get rejected on this local downtrend, and then come down to a 3,800, this would be a key sign to short this market to hell, right? Short this market to hell. This arrow is just set a little bit to the side so you can see it. And then, of course, if we broke above this local downtrend, right, and we're able to reach the top of our, macro downtrend, and then even if we got rejected, if we held our support at this green box, which I have a little arrow here, which does correspond to all these momentum zones as they've been moving up, right? All these EMAs as they've been moving up, right? You can see that this wasn't BS, right? These EMAs had to move up, and of course, I've been adjusting them daily for you. But you can see that they do now coincide with my, kind of markdown here, and if we catch support there, that's going to be a very good sign to just long this market because there's a good chance that we could have a breakout either here or here, depending upon the news. And look at this, this corresponds with the announcement by the Fed, right? So this is going to be the CPI data coming up tomorrow, and then this is going to be the Fed's announcement about their policy. Now, keep in mind, if we lose this green zone, it doesn't matter if we pump up here. If we are coming, if we're just doing some profit taking, just kind of chilling out, doesn't matter if it's up here in the middle or if it's down here at this level. That's just the level I don't want to lose before the Fed decision. But if we're hanging out above this area, above this momentum zone, we actually have this full region to play with, to be honest, guys. The stock market is looking pretty strong right now. Then what would happen is we could find ourselves with a bad news from the Fed, just losing our momentum zone, and then this bottom situation, right? This bottom situation that could have just happened due to normal price action, right? Just a normal price action could have taken it this way. Then special price action could actually intervene. And if we get a pump up here, and then the Fed just knocks us down on our ass. That's why the 14th, right, and also the 21st are such critical dates this month. However, the reason why I've been encouraging trading to the long side, ever since the beginning of September, is just because, of course, in the stock market, we did bounce off of that support zone. And then on Bitcoin, we actually had that descending triangle, which, although there was a bit of a fake out, the descending triangle did suggest that we were going to get a nice bounce, which I've had this dotted line up for a couple weeks now, as we projected this descending triangle. And a truth, truth in advertising. Originally, I had drawn it from this wick down to that wick, and then I adjusted it to this wick. And of course, I thought that the path that we were going to take would be something, something like that, actually. So that was drawn how I had it before. Um, and what happened is, like, we were supposed to, in these type of formations, there's a 70% chance that we break to the upside. And what we did is we ended up just kind of going sideways and then losing support. And so this was a massive market maker. The exchanges, pay people in order to be a professional position called market makers. It's not some type of conspiracy. That's an actual job that you can apply for. To be these market makers took the market down. They retested this wedge perfectly, right? Nobody should say that any structure was broken. Nobody should say that it looked super bearish. Guys, it never looked super bearish. I'm seeing, some of these guys, just some of these really, really great traders like Mitch Ray and some of these other guys, saying that it looked really bad, but it didn't look really bad. We were in this supportive area. We actually caught support on the wedge itself. We got a nice bounce off of the confirmation of the breakout. It just happened to be a very, very sloppy breakout. And so, I had a very detailed discussion with one of my close friends in Crypto Retta, during this time, whether or not we should be endorsing people to get into a position. Because first of all, we were rejecting off of this downtrend, right? We had these candles put in. We had a little bit of a zone here. Let me go to a 4-hour, and you can see what was happening. When I made my video about us getting rejected off of this line, that was right here. We only had this one candle, so for me that just looked like a breakdown, right? A bounce. And then, so that was good, but then what we had is a rejection right here. And I didn't, there wasn't enough time to make another video because over the course of the next day, this thing just chopped up and it just pumped up. And we were asking ourselves whether or not, because of this bull flag, we should endorse a position to get in long. And really just the same, basically just the same risk that we had already mentioned for this area, just still applied. Nobody could really expect that it was just going to go gung-ho vertical. That's not usually how it goes. But guys, we did have, right? We did have this institutional candle over here. We did have this institutional candle over here. We did have this institutional candle right here. And so there would be some expectation with all those institutional candles to the downside that there was a high possibility that we could have an institutional candle to the upside. And, whenever you have, all these institutional candles in a row, that means that there are some games being played in the market, right? There's low liquidity, the bullies of the market, the exchanges, the whales, the VCs, all of these, institutions and stuff are trying to push the price down, right? During low liquidity, and sometimes they reclaim that. And what you can see is just these type of vertical spikes that just come out of nowhere. It's not your fault if you didn't miss that. Anybody with common sense would have thought maybe something like this was going to happen, and then you kind of secure this area, maybe with a 4-hour candle, and then you have time to plan your strategy, maybe to this area, then you chop around, and then like this. Nobody would expect just a pure kind of vertical action, and that's why a lot of people are still in disbelief because you don't usually take the elevator straight up. Okay, usually you walk the stairs up and you take the elevator down. Right, and so that's a kind of a common saying in trading, and that's why a lot of people were knocked on their asses and not really ready in their positions when this happened, even though the measured move to the breakdown of this descending wedge, which we've been talking about for weeks and weeks, that measured move was actually, it still hasn't been hit. And guys, I haven't changed my opinion whatsoever. Although we were just waiting for this area to test and break through, the measured move has never changed. I have never deleted that. This is still our target. And if we go ahead and let me just clean up this chart just a bit. Okay, there we go. And if we go ahead and throw on our daily EMAs. Let's go ahead and throw on the daily EMAs. You can see, look at this, guys. Look at this. We have our daily 100, that kind of daily, 89 EMA. I use the 100. Some people use the 89. That's why I mentioned that. It basically serves the same function as what we're looking for. When we break through that 50, you can pretty much expect there's a good likelihood that you're going to reach the 89, and that is the measured move here. And so if we do start getting resistance in that 23,000, 24,000, it's going to be because the measured move of this descending triangle, this descending wedge, will have played out. And while nobody could have, predicted that it was going to be an institutional candle just directly up, just totally disregarding, right, showing no respect whatsoever for the 4 EMA, the 9 EMA, the 21 EMA, just pushing them aside, like cutting in line, right, with no regard whatsoever. You can see on the way down, it only just broke through the 4, right? On the way down, it just broke through the 4, but on the way up, it broke through the 4, the 9, the 21. It just slapped them, took their position in line, and went straight for a beeline for the 50, which then it recovered this diagonal that I've been talking about. That's why I have the circle here, because we were in danger of putting in yet another kind of a Wyckofian breakdown. Let me just take off those EMAs. And this is the risk that, because we have to do risk management, right? We have to do risk management over here. This is the risk that we were talking about, that possibility of a Wyckofian pattern being put in that did show potential signs of weakness. And let me just get my Wyckoff chart here. What you can see is that we did have this Wyckofian schematic over here. And so boom, 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 we got signs of weakness. We retested the diagonal, confirmed the weakness, and then just broke down. So why was I telling you that diagonal was going to be so critical? Because that would be the confirmation of either the signs of weakness, or it would be a confirmation of signs of strength, guys. And so this Wyckoff redistribution schematic is now thrown out the window. We can go ahead and set that aside, ladies and gentlemen, as long as we close in the next 3 hours above this zone. We are going to have a solid daily candle over that level of 22,000 that I gave you, which is the standard, okay, which is the standard for me for showing that strength and that potential continuation to the 89. And while we've always been saying there's a 70% likelihood of breaking to the upside, while we did have to wait for the breakdown, and gentlemen, ladies, I did not expect that we were going to just pump on a vertical candle. I really apologize. I couldn't give you better advice. I debated whether or not I should talk about getting into a position here, because there was that 4-hour bull flag being put in, but the problem is that we had been rejected, rejected, rejected. There was a solid 4-hour candle rejection here, not once, but a bunch of times, and there was just a good chance that Wyckofian pattern, call it PTSD if you will, that there could be a chance that we could get slapped down, and I just wanted to break that diagonal first. I had no clue that these market makers would just steal all of our positions from us, not allow us to get in on any entry at support, and just to take it away. So what they wanted us to do was get in at resistance. And I don't know about you guys, but I don't buy at resistance. Okay, I don't buy at resistance, and I don't buy on a local downtrend. And on the 4-hour, this was technically a downtrend, right? Lower. Here's a low. Here's a kind of a lower low. Here's kind of a lower high. Here's kind of a lower low, lower high. And so we were in danger of putting in another lower low and breaking down, as we lose this formation. And so this was a market maker ploy to get liquidity. And it was very reasonable to just sit this out. If you caught that, congratulations. But there was a lot of question marks and also some PTSD going on at that time. And the goal here is to protect our capital. It is not just to make infinite money, okay? There are always risk. So, guys, that's what's going on with Bitcoin. You can see, of course, that it is fairly bullish, still turning up, kind of overheated. Let me get off this 4-hour. Let's go to the daily just to get a little bit more perspective. MACD looking good. The RSI looking good. The DI and ADX looking good. We are showing continuation to the upside. I don't see anything wrong here. The only thing that I could let you know is that, of course, if we do violate our momentum zones that I do have here, which a bottom line for me would be 20,300. If for some reason at the end of the day we broke down under 20,300, I would be pretty concerned. And then I know a lot of people are saying the line in the sand is 20,600 because of support and resistance. I don't believe that. I strongly believe it's actually 20,800. That's my assessment. So you guys can think what you want, but for a weekly continuation, because we're looking for the bullish angle, we're looking for the long run, we're seeing Bitcoin entering this potential zone on the weekly, right? On the weekly, guys, look at this. Look at our EMAs on the weekly for Bitcoin. We are finally entering that bullish zone, just like we were doing right here, right? With the potential for a squeeze to the upside, perhaps even all the way up to 25,500, right? Let's just call it 25,000 because of this former wick right here, which we weren't able to push through because of this wick over here that we bounced off of. And so that's been both support and resistance. And so we can kind of consider on the weekly that we might have some interaction around 25,000, which then might be able to be short. And then you might see something like this. Even if we're hyper bullish, you might see something like this. Well, there's going to be that 89, and then probably 25 is going to be something, and then you can see maybe like a check back, and then if we're putting in some type of a price action like that, the 21 will start curving up. The 9 is going to be curving up. And then, ladies and gentlemen, we're going to have a squeeze play on the weekly. And that is going to be incredibly exciting if that happens. That's what failed right here. That's what sent us down to hell, right? And I think a lot of people who are just expecting us to break down, they're going to have to wait, right? They're going to have to consider my threshold of this kind of diagonal zone, of these momentum zones. We're going to have to watch how they interact daily. We're going to have to see how these things curve and where exactly this price action gets to. But right now, do not be a perma bear. Alpha fam, do not be a perma bear. Also, do not be a perma bull. We are quite extended over our daily 9 over here, and so it is quite reasonable at any time at any one of these resistance lines. And they're hard to see because I just highlight the main ones, but I do have these resistance lines here, which is what we're kind of bouncing off right now. Just the weak ones. I don't emphasize their color too much. Just kind of make them gray so they remind me that they're there. But basically, we have these little resistances that could eventually just send us back to just check with the daily 9, perhaps around. Hey, look at that! It's right there around that 20,900, and then we have the daily 21 around 2,800. So my standard of 20,800, that's based upon the weekly Stokes. But even if you use your daily EMAs, you're not going to want to violate 20,800, and because you're potentially going to get a squeeze play to the downside on the daily, and that's definitely what you do not want. Okay, so guys, like, we should actually hope that we hold on to this zone, pump up to the 89 on the daily, and then have a check back to this diagonal, right? Have a check back to this diagonal, and then that's going to be our bounce to 25,000, and then enter a weekly squeeze play if we're going to continue bullish. Otherwise, we could get slapped down here, put in a lower low, build up that bullish divergence, and then we could try again with just an added value of bullish divergence. We did have multiple drives of bullish divergence on the 12-hour back in this zone, which I did comment on. I did provide links to that, based upon a user request. And again, in the Alpha Commission Discord, I did comment on that bull flag where I did say it looks like Bitcoin wants to explode to the upside. That's in the Discord, me saying that at this point. And so if you guys want to join the Discord, there is a link in the description of this video. It's totally free. It's just a free group. Guys, you come here to watch these videos, but feel free to join the community and add some input, and maybe even throw out a request. If you have a request, I can include it in these videos if you like this content, or if you would like me to check something for you. I don't pretend to be the best trader in the world. I do great with a macro day-to-day trading. I'm pretty good these days, but for those hourly kind of sniping type stuff, not the best. And but I think you can tell that we're pretty much on top of things over here at the Alpha Commission. So feel free to join and contribute if you would like, or if you're just a newbie and want to learn, feel free to ask some questions. Guys, I think that's going to be it for Bitcoin. It really would not be weird if it did hit these areas and then reject, pull back, and then continue to go, or if stocks based upon that Jerome Powell decision just dump to hell, then Bitcoin could dump to hell and again make that lower low and perhaps put in a bullish divergence, and maybe then we try again, right? Because what's the worst that Jerome Powell could do to us at this point? The market expects blood, okay? Like, we expect more blood in the water. It's starting to be built in, and while the market hasn't calculated everything that Jerome Powell could throw at it, we could probably recover pretty reasonably. So let's just watch this space, unless there's just like a major macro curveball from one of these areas, like a exploding nuclear reactor or something in Ukraine. Then the market is starting to get a pretty good feel for what's going on, and we are getting a lot of, at least local kind of regional bottoming structure, even if not macro. If we can't confirm the macro bottom structure until Q1 at the earliest of 2023, and it's just because it takes weeks and weeks, it takes months to confirm economic conditions on the macro. So I can't tell you that any of this is confirmed on the macro, and anyone who says that is just a damned dirty liar, here because they cannot. They need a business quarter worth of data at a minimum in order to confirm those type of things. And usually you need, about 2 business quarters. And so if you do see like a crypto winters, lasting like 6 months, 9 months, even a year, sometimes 2 years, it's just because they need more data to confirm. And it's not like, even if we have a mid-cycle rally to like 30,000, it's not like we can't come back down to retest our lows or some slightly higher area, of our lows, very similar, and then we go because the market also likes to confirm things. And right now, in the most bullish case, one thing that I would be looking for is some type of potential formation, such as this type of a broadening wedge. You can call it an inverted head and shoulders. You can call it, whatever. People call it whatever they want. What I'm saying is that this is actually it's a very short and stubby one. Okay, it's a short and stubby broadening descending wedge, which would have a target into that $30,000 area. And so if we do end up filling our CME gap at 28,000 on this next move, don't be surprised. Don't be a perma bear, guys. Don't be a perma bull either. Just to do your risk management and protect your capital, and but at some point you have to take a chance. I mean, we had a descending wedge with a 70% chance of breaking to the upside. Okay, we just broke this diagonal, just totally getting rid of the Wyckofian suggestion, and the CPI, the 3-year New York Fed data came in good, suggesting the CPI data might come in good. Like, what more do you want, guys? Can I give you anything? Can I hold your hand any tighter, right? Guys, we can talk about the downside until we're blue in the face because we have been in a macro downtrend, but at some point you have to consider the possibility that the market may at least have a local regional bottom being put in. And so, there are some things to potentially expect to the upside as we get these mean reversions, return to the mean, which you can see the 200 EMA. It's way up here, right? We slashed through the 200 EMA on this mean reversion. If we're going through a mean reversion process right now, then of course, this would be a great target. And so the fact that, my measured moves are pointing us in that direction, I'm going to go with technical analysis. I'm not going to go with fear or emotion. And of course, I will have stop losses on our way as we continue to move to the upside. And if we do face rejection, then of course, I won't be surprised either because we are in a macro downtrend. Guys, let's see. What else can I just to show you on this one, just to sharpen the point there. Let's go ahead and turn off this wedge. Let's go ahead and turn off our support and resistance. Let's throw on the good old alpha origin channels, and you guys can just get a good context for where we are. Let's turn off that momentum. You guys can see where we are. On the good old alpha origin channels. These are the origin channels that I developed. It's just my competing theory to those stupid rainbows and all that stuff, right? And so this is something that has just been very solid for us. It called the area not to buy, right? Anything above the yellow line here, do not buy, do not hodl in those areas. You are a damned fool if you hodl or buy in those areas for a long-term holding. Under the yellow line is where we have seen capitulation just time and time again. We saw it yet again under the yellow line, and then the last leg of capitulation has been put in under these last two kind of bear bottoms, and then we are seeing something very similar here. While we may have a fake out to the downside, that's possibly a market maker fake out down there. and it is possible to retest it again or even try lower. The fact that we're holding so strongly, and the fact that the stock market is holding so strongly, we should not dismiss this concept that I have carefully crafted for us. Because even if this concept did change over, one or two cycles, we're pretty much in the same mean reversion from this cycle. Right? You can see this is the same sine wave. Okay, guys, this is the same sine wave. And so the fact that we are in the same sine wave does cycle does suggest that this area should not behave that much differently than this area. So this pattern, these alpha origin channels, conceptually, right, conceptually, and having those point accuracies, right, the projection for a blow off top that we never had, right, which would put us somewhere around 110,000 if we had a blow off top, right. The fact that we're seeing all of this pretty much accurately play out does suggest there may be something to this, that maybe the market makers, etc., may be using a similar type of model as what I'm constructing, as opposed to those weird rainbows and stuff that other people have made, where you just see the rainbow and it's just like breaking down from it, right? It's totally breaking down from the rainbow, and they have like no layers underneath those rainbows, right? You've seen those things, right? The big old macro curves and stuff, and it's all breaking down from it. No, guys, no. No, we have structure underneath us, right? We have the potential to go lower. We have macro channels underneath us that we can break down to. We've done it before in COVID. We're not just hanging out below a rainbow, guys. We are sitting on a bloodline, right? We are sitting on the bloodline where crypto has been bled to death, right? To near death, where it has just been bludgeoned and beaten to near death. And this is the area underneath that bloodline where you really strongly, and not financial advice, but you really strongly should just consider to talk with your financial advisors about potentially getting in the market. And we are in that green box that I have had marked out for months and months. And, we haven't had a significant mean reversion to the downside yet. And yet, if you look at how Bitcoin works, right, kind of a mean reversion, a weak one, a big mean reversion, right? Kind of a mean reversion, a big mean reversion, right? And then let's see, going to this market, kind of a mean reversion, tiny mean reversion. Where's our next mean reversion? Guys, we should someday have a big mean reversion. And look where this mean reversion took us on this one. Do you really want to be sitting this out and just having your, sitting on your hands if the stock market looks bullish, if we don't get destroyed by Jerome Powell? Like, do you really want to be missing out on a potential run, right? Let's just be conservative and use my descending broadening wedge formation. Then we could be talking about $30,000. And so let's actually talk about some potential targets to the upside, because you know what? It's worthwhile, okay? We have the good old alpha origin channels here, right? And so, look, what do we have here on our origin channels? Oh, look at that. $25,000 is this blue line that I have, right? Oh, look at this. The CME gap lines up with that $28,000 line. You see this dashed line right here? Oh, look, we sat right on top of it. We sat right on top of it. We broke down right to it. That line is significant. So, hey, maybe $28,000 is something reasonable. And then where was that white line that we broke down with a kind of an institutional candle to the downside, right? We have always reclaimed these type of candles, and where does that take us to? Oh, that takes us to 35,000, and then we have one above it, and where would that take us to? $50,000. And so I'm not trying to be a moon boy. I'm not telling you these top levels. I'm just saying what's happened in the past and what could happen in the future if we do have a mean reversion. Let's throw on some mean reversion chart lines. right? And if we're just looking at the daily, we can say, oh, okay, yeah, like we reverted to the daily mean, like that's where we are right now. Like we could have a pullback, of course, we could pop up and then just check back. So on the daily, this is like. It's like nothing. Like, why would you expect any mean reversion here? But if you throw on the weekly, we start to get a totally different picture, and you can see the mean reversion goal right here is basically this area, which is saying a $40,000 for a mean reversion. You can see. Let me turn off this. Let me turn off the alpha origin channels, and you can see our mean reversion line is actually suggesting $40,000. And what did we do the last time we had this type of regional local bottoming structure? We actually ended up not only hitting the mean reversion, but blasting through it almost twice the distance to the upside. Okay, guys? So, do you really want to sit out if that type of a play is happening right now? It doesn't mean it's the bottom of the bear market. This thing could hit the mean reversion, and then it could come crashing back down and even make a lower low because we haven't finished the bear market yet. There could be a global financial crisis, and then maybe that's the bottom of the market in 2023. Maybe we're all just jumping the gun in 2022, and maybe this is just a 2 year bear market, right? Or a 1.5 year bear market. And in 2023, we have a global financial crisis. We dip down to our low. We have a very, very long bullish divergence being put on the chart. And then we just make super all time, highs to whatever number that, the gurus on Twitter want to tell you, right? And so, guys, I'm just saying, like, number doesn't only go down, okay? Number doesn't only go up, doesn't only go down. We have a double bottom here. Look at this. Look at this. This is a double bottom. This is a double bottom, guys. We have a W formation. Stocks are looking strong. I'm not trying to tell you what to do. I'm just trying to make sure that no one is in disbelief and that we don't have perma bears in the audience. Guys, I am just going to blaze through the next set of coins because we did stocks, we did Bitcoin. Let's go ahead and just check Ethereum really quickly. And, let's just see. Let's actually look at Ethereum's mean reversion on the weekly. Yeah, this 2,500 that I projected was possible. I don't think that's going to necessarily happen, but I did project it was possible a while back. Guys, Ethereum, let's go ahead and just jump to the daily so that we can get you those momentum zones and just to help you understand what's going on. We there are a little bit of formations here that we've been talking about, but basically we're still talking about that $2,000 area target. Ethereum is checking back. I still have the descending wedge for Ethereum that would put us at $2,000. Never have changed my opinion from that. The strength of Ethereum is why I believe Bitcoin could continue to go up. Look at this check back and just boom, right? It just kept going, just still holding above that momentum zone. No issues here. Let's go ahead and look at ETH versus ETH versus Bitcoin in terms of strength. Do I have that? Yeah, I do have that. You can just see that Bitcoin is exploding right now. I'm sorry, that's the Bitcoin chart. Where is my Bitcoin ETH chart? There we go, right there. Okay, so we do see that Bitcoin is just exploding ahead of ETH right now. So it is gaining considerably. You're making more money in Bitcoin than you are making in ETH right now. And so while ETH is still doing strong, you're seeing some profit taking and stuff like that, some resistance, starting to see a little bit of rounding because people are now realizing, oh, maybe I should have my money in Bitcoin right now. If I want something conservative, maybe I should be in Bitcoin, not Ethereum, as Bitcoin tries to catch up to Ethereum. Sorry, just taking a sip of coffee there. I've been talking considerably. Let's look at Bitcoin CME. Bitcoin CME doing the same thing, doing what it needs to do. It is not in that weekly squeeze play yet, whereas the Bitcoin chart, Load. Come on, guys. Load up the screen. Okay, let's see. Let's go ahead and just turn that support and resistance back on. And let's turn our momentum back on. You can see that on the 24/7 exchanges, Bitcoin is above the 9 EMA for a potential weekly squeeze play to come up. But you do see that ETH not only is in its squeeze play, this is weird. The 4 EMA is above the 9. Yeah, so there is some pull to ETH to the downside, but this seems like just a healthy check back. Let's go ahead to go to back to the Bitcoin CME chart, but you do see that a Bitcoin CME chart is actually meeting resistance at the 9 EMA. So it is not in a potential weekly squeeze play. It just is in a healthy position, but it's not in a in a setup for the potential for a weekly squeeze play. Just thinking about it. Okay, so Bitcoin slightly different on the professional exchange than the 24/7 exchange. Let's look at Ethereum. Ethereum on the professional exchanges, you do see, let's see, there's no gaps here. Just this one down here. So again, like the risk for Ethereum is always that this gap down below might get filled, whereas for Bitcoin, it has a CME gap overhead right up here, which might get filled. And so if Ethereum and a Bitcoin switch strengths, it could be that Bitcoin's going to reach to fill its CME gap up here around 28,000, and that Ethereum it may end up reaching to fill its CME gap down here if it puts in a little bit of a head and shoulders formation or something like that. Checks back, and then maybe they sync up and go again. Who knows? It could be Jerome Powell that initiates that thing. We're going to have to see what the Federal Reserve decision is. But let's go ahead and move over to KDA because KDA has been doing great things. It's just been going at it. Like I said, guys, like what Bitcoin did was a favor for KDA and for some of these other coins. It pushed KDA on that mega Bitcoin candle. It pushed KDA above this wedge, and it pushed it above this wedge, and it pushed it above its it's a horizontal support, which it had been losing. And then what we see here is exactly what I suggested. I wanted to see us, basically hold on to this diagonal again. And then what did I say in the last episode where we talked about KDA? If it can hold that diagonal, if it can hold the top of this distribution wedge, then we should see it to pop up to one of these resistances, and you just got a solid 11%. And so this was basically our buy-in right here. Let's see, don't extend that. Make a nice green box. So this was our buy-in. This is what I was saying, that if we can hold on to the top of this accumulation wedge and just totally undo this breakdown, then of course we have the potential to pop up. And let's just say that this is actually a descending wedge. What is with my lines just having all these extensions? Let's see. Okay, then we might see some type of measured move, something like this, where you could imagine that KDA might continue to try to continue bullishly in this fashion. And so KDA has done its job, it's done what it needs to do in order to start looking bullish again. Of course, it has pumped 11% since the area that we said we wanted it to check back. And again, you can see this candle, okay, guys? Like it popped up right after breaking down, threatening to fall to hell, right? It ended up breaking back up. It checked right here. You can see this wick all the way to this. Don't discount this triangle that I pointed out here, right? It broke down to the top of this triangle, used it as support. That's where you would want to get in right there. And then, of course, we just pumped up. And you could wait until we're on top of this diagonal if you want to be conservative, or you could have waited right there because that also was at the top of a support line. This teal line right here was the top of a support line. And now we're just hitting a resistance area. So this is technically an area to take a little bit of profit. You do see us just kind of meeting a little bit of resistance there. But the measured move for this wedge that ended up being formed would pretty much be in this area, and that's in line with our historical kind of zone that we have here for trading. So KDA looking good. It's also back into the potential for a bigger type of squeeze, and it's well above its momentum zone on the daily, so it's not in danger of losing anything. Let's see if I can just bring this to the front. That's weird. Why does that keep disappearing? Let's see this one right here. Maybe just put there. Okay. All right, so that's KDA. Let's go ahead and check out FLUX. FLUX, of course, is just doing a healthy check back again. It did lose some of this area. No, its EMAs are inverted right now on the weekly, so something weird is going on with Flux. It's maybe overheated, guys. Let me just check this out. Yeah, it's been going for quite a while. We do have multiple drives of multiple drives of bearishness starting to build up in the bullish control zone, which would suggest the possibility for this to have a turnaround. If we look at the ADX here, we do see this cross right here, that's a big threat to Flux. Okay, the ADX is coming down, so I don't know how long this will last. But if this red line does start moving above this dashed line, I'm gonna get a little bit worried. Okay, about Flux. Right now, it's not doing anything unhealthy, but again, that zone where I suggested to take profit, that just would have been your friend. Okay, if you had taken profit there, that would have been your friend. 15% down if you didn't take your profit up there. And, we'll never know, if it could have pushed through and you could have made more profit. But, guys, what do I always say? Take profit along the way. Always be selling, always be taking profit. Put food on your table. Don't be loyal to these coins. These coins will not be loyal to you, right? Guys, let's go ahead and look at ADA. ADA just chilling out in my zone. What did I say? I wanted to see it to break above this parabolic curve. It broke down from it, basically on the diagonal. I wanted to see it to hold. It ended up holding that diagonal. And then the final boss was this kind of, Charles Hoskinson or whatever his name is, kind of. Weird kind of formation here. Let me get out of the log chart. And then what we're doing is we're just basically sitting on top of that. What would I expect for ADA to just kind of chop out this zone? We are above our daily momentums. We are in the potential for a weekly squeeze play. So this thing is just kind of chilling out, just doing what ADA does, being slow and steady, right? And so basically the measured move that we still have going on here is basically to 56 cents ish. And I would just expect this thing to continue to try to chop up as long as Bitcoin and Ethereum look bullish. If Bitcoin and Ethereum start to look sick, then this thing's going to come down. But there is a lot of potential here. You can see the top of our range, 58 cents, 60 cents, whatever. So if this thing continues to go, it can continue to go. It's in the middle of the range right now. You can see our entry, right? Our entry was down here. So I wouldn't necessarily enter here, but I'm just saying it looks okay, right? It looks okay. Looks like it's being supported. Um, just it really depends on Bitcoin and Ethereum from now on. Guys, ZIL is looking great. I mean, nothing wrong with ZIL. It's looking like Kadena, and they're kind of taking turns in how they're moving here. At first, it was ZIL that went like 10%, and now it's Kadena that went 10%. And Kadena was a little bit slow, but now Zilliqa is being a little bit slow. We are entering in some nice areas for the potential bullishness on the weekly, and then of course we are totally above our daily momentum zone for Zilliqa. For CRV, curved out. We are kind of losing our wedge again. So, this is a very resistant area right here. You see this? So this actually was a perfect area to kind of be taking some profit from. You can just see that, right? Not really, not really anything to point out. This zone I made way too big, but the key point here is just that we could get easily rejected off of this. You saw what happened when we broke down from it, bam, all the way down here. So we do need to kind of show some strength into this zone and then push up through here. You see it just getting rejected, 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 and even here rejected at the bottom of it. And so this is the big boss. That's why it's a big red zone for me. It's a big, boss for CRV. And if CRV can push through this, then look at what we have for potential upside, guys, right? Look at what we have for potential upside. That's huge, guys. That's huge. So let's just take a look here. That's 63%, right? You see how this thing moves in this area, right? It just reclaims this area all the time. So, guys, all the hard work that CRV is doing, don't discount that, because there's going to be a big reward if it does get through that. Just to make sure, if you're entering on these triangles, just try to make sure that we're capturing our momentum zone. Maybe you want to get in, a little bit higher. This might look like it could drop to the bottom of this wedge. It just looks a little bit frail right now. It is losing our daily momentum zones, and but it's still keeping the potential for weekly. So I'm not discounting CRV. Just a slow mover, just looks a little bit ugly. A lot of resistance in this area. A lot of resistance and support that has just making a zone right here that's pretty tough. One that's very difficult to push through. There's no clear looking movement in here. It does go up and down. So if we are able to break above $1.27, there could be some nice price action. And if we ever break above, let's just say $1.50, $1.47, then there is a lot of upside, right? In fact, I may have to reevaluate how I've set this line, because I don't like how I made that zone. Sorry about that. But it is, you can't see the general truth to it, right? Let's go to the weekly. You can see the general truth to this, right? If we push up into this one, we can probably get up to here. And then if we break through this one, we can probably get up to here, right? A little bit of resistance in this area, right? But in general, these candles just move across these big areas. And so still a good place to be watching CRV. The best entrance would have been down here, because you see, like, we just moved through this area so nicely. And then we're just at resistance right now, guys. That's all. And so just to be careful in this area. That's all. All right, guys. That's going to wrap it up. That was your alpha for the day. Stay safe and happy trading.